The first thing I'll say is this has changed since I had planned what I was going to say about the Bund, but since retail sales were weak, and clearly the Bund has reacted accordingly, rallying up, it's slightly different to what I was going to say. Very clearly, you can see very clearly where our pivot point on the day is. It's here at 74, this low volume node, a tick below the IB low. It's where we spent all the morning, and then after retail sales we broke higher and we haven't come close to testing it. This morning the market stopped at 59.00, so just to give you a few levels on the upside, because I was planning on giving you lots of levels to the downside. Now it looks like we need to give you levels to the upside. My first observation is at 07 is a reasonable level, just where we paused a couple of times before we had a minor blip through on the 9th. And then my next level to the upside is 18, which coincides with a high on the 5th of Feb, and then this shelf that we formed on the 3rd of Feb. Above that we have singles at 25. I don't think we need to go too much higher than that at the moment. To the downside, well, basically the levels that you've had for the course of the day, whatever's going on during the day. So this pivot area down here at 74. Interestingly, the VPOC hasn't shifted, so keep an eye on that and see if we stay up here whether or not the volume is able to transfer higher with it. That'll be a good indication that we have the impetus to then push higher. So at the moment VPOC is still way down below at 63, and obviously we have all the levels that we had from this morning. Those of you who were trading, I know a lot of people were short around this 60, 61 area, and the market just wouldn't go. So you obviously know all the good support levels down there already. Just have a look at a daily chart a second, because you can see that we've been in this range for quite some time. And I just want to put a profile on these days just to show something. So we just do a profile for this whole range area, and you can see where we are at present. We're just above. Earlier we were trading down here where all this volume was done earlier, 60. This is where we were really struggling to get through this 60 zone. We've now come up and we've taken out what I thought was going to hold us, to be honest, for the rest of the day, which was this 84 area, and the next area up here is this 02, 03, with a little spike of volume there, and then you've got a very noticeable lack of volume entirely up to 20, which is just above that 18 area, that high of day, and that shelf I showed you. Well, there's no volume gone through at 20, so that's a good reference point as to see what's going to happen here at 20 in the Bund. The only other thing I wanted to show you was a quick, this is a footprint chart, and just to show this, all I did is put 10 days delta on here, just to show the market is, for the first time in a while, over a period of 10 days, short. So it was this was up at 35,000 when I was doing this chart, preparing this chart about an hour or so ago. It's back down to about 29,000 now since retail sales. Nevertheless, short term, whether it be profit taking almost certainly or fresh shorts, there are shorts in the market, so just be aware of that. Okay, so moving on from the Bund, let's just have a quick look at the Euro stocks. This was where we saw some very good trading, and a lot of guys did very well this morning. Starting off with the market profile chart, and the trade that most people managed to catch on to, coupled with the fundamental news that was coming out at the time, is this breakout here. Initially it did very much look as if we were going to come down and take out these L's. As it happened, we got, as everyone knows, got numerous stories out this morning, and that ended up taking us much higher. But Simon, just to point out this morning, Simon pointed out 83, 85 zone, I think he described it as being the area. At the time we were trading below it, and he was saying that it was important to him whether we were above or below. And just to show that that panned out to be true, although we crossed twice within it, no volume went through here, very much acted as a pivot area, and held itself quite nicely. So very valid point that Simon made. He said he wanted to be long above, I believe, short below, absolutely spot on, and that panned out. So if we look at the profile, our key area, or what we've been looking at over lunchtime, is attacking this 31 area, coincided with the 50 area in the DAX, where I think, as Adam tweeted earlier, there was huge absorption, 450 lots or so got absorbed up there. Up here at 31, similar. I'll show you on a footprint the sort of absorption that we saw, but this was a previous recent high going back to 2008. So if we go above here, we need to template and we need to look at those things, and I'll show you one of those in a moment. But clearly the support levels are very clearly defined. The pullback over lunch came down to 13, 14 zone. I think it's 14 was actually the low. And then the breakout area that we pulled back to, this 0405, coinciding with this old high over here at 04. So if I pull up that footprint chart, so this is a condensed footprint chart. There are two things I wanted to show you on this. Firstly, on that pullback down, we kept on as we came back down at this lunchtime pullback. The VPOC for each 15-minute time period, this is a 15-minute footprint, basically held around this 15, 16, 17 area. So if we do get a pullback later on this afternoon, this is going to be a sensible area where there's been good volume gone through, between 15 and 18. Now if I just expand this, so now you can actually see the numbers. This is net delta, okay, so it doesn't show the total volume, it shows the net delta. And you can see very clearly when we were having that push up over lunchtime how much absorption was going on between 1,000 and 1,600 lots at pretty much every price. And even though we broke 31, there were no stops going off at all. We only had a 2-tick extension, and now we're building something just below it here. And the other thing to point out is this is a 10-day delta, and actually it's short. Okay, I've got 11,000 net shorts over the last 10 days, which is a little surprising, to be honest with you. So let's just have a look at the daily chart, because since QE, you can see here after QE, we've basically been stuck in this range, looking to break higher, and we haven't been up here since 2008. So if we go back to find out when we were last up here, if I can find it, I had it earlier. Okay, it's not going to show me for some reason. 2011, 2010. Okay, so here we are, 2008, and in fact it all happened in the space of a week. So from the 16th of January down to the 22nd of January, we had a 500 tick move in the Euro Stoxx from 3,600 down to 3,100. So we're currently up here at 3430 area, and you can see we've actually spent no time at all, very little time at all. So I have done a template for these dates. We're looking at the 17th of January to the 22nd of January 2008. I've made it into a 15-minute chart, and it's very difficult to find any significant levels, very difficult. We spent so little time here. The market just basically collapsed all the way through these levels on its way down. Now there's a couple of fractals showing up here. We've got 37s and 40, 41 area. I mentioned this to the guys in front of me earlier today when I thought the stops might go. My concern with these though is that these bars were made, this bar was made at 9 o'clock at night, this bar was made at 5:45 and then at 6 o'clock. So thin markets, no cash open, not sure these levels are going to hold, not sure how valid they are. Other levels I've picked out. I had to go into detail in this, and I haven't been able to recreate the chart unfortunately on here, so you may have to take my word for it, but within here there were quite a few pauses at 61. 34.61 seemed to be quite a good level. A better one is undoubtedly 76 to 78, which is in this zone here. We had a series of highs and lows towards the end of this day and at the beginning of this day. And then most importantly, because I do think that if we do break into this area, we're going to get through it quickly, is this area here at 34.90, 91, where all this volume went through. You can see the on the heat map here, a lot of volume went through at 34.90, 91. But I urge you all to do your own templates and get your own levels. Okay, make sure you know how to do this and be familiar with this. As a reminder, the dates you're looking for, 17th of January 2008 to the 22nd of January 2008. It's a 500 tick collapse, very aggressive. Not really got much else to say in the Euro stocks. Looks like we're building some sort of value. We're going to be entirely dependent on the S&P, and we'll see how that reacts. So if I call up the S&P, and we'll just have a quick look. First thing to say is the head and shoulders, which Dan has been alluding to over the last few days, and as he said himself, it looks like this is redundant. This is done. This is no longer possible to be a head and shoulders. Remember, this is a 24-hour chart, not the pit-only chart. We are currently trading up here, and I think any idea that that is going to turn into a head and shoulders looks invalid, frankly. The next thing I wanted to look at is a footprint. If I can find it. Sorry, bear with me. Okay, this is my 15-minute footprint again. Again, I've got the last 5 days delta is actually minus 18,000. This is pit only. This is a pit only delta, but short 18,000 lots. Why is that significant? Well, look what's happened over the last 5 days. Actually, the market has gone up. Okay, the market has actually gone up over 5 days, and we've got a few shorts. That hasn't been happening in the S&P over the last, I was going to say a few months, but probably be fair to say the last few years. So just be aware of that. So let's have a look at the pit profile and the, well, first of all, the overnight session. So the overnight session, reference points of the overnight high, 77 3/4. The overnight low is all the way down here at 58.5. Those of you who are used to listening to me will know that those are the only reference points I take from the overnight session. I'm really not that interested in it. I don't believe the volume is significant enough to have a direct effect. So translating that over to our pit session, we're clearly, well, it's come back to 72 now. I was going to say we're clearly going to be leaving a gap. I'm not so sure. Maybe, maybe not. 2 days ago, if you remember, we opened and had a gap, and a lot of us, myself included, thought that it was quite possible that this gap would hold, the gap between on the high on the 9th of Feb and the open on the 10th. We thought the gap would open, it would be a gap and go session, and the market would go higher. Actually, that didn't pan out. So then today we're going to have a similar situation, and actually if we opened here a similar size gap, about 2 or 3 handles. Well, in my experience, the 2 or 3 handles, that is prime gap and go type of gap. I do think it's possible. I do think it's possible. So I'm not sure. That's my view. It's what I'm looking to do. But if we don't, levels, okay, obviously you've got the gap fill, 69 3/4. More importantly, the closing gap fill down here at 66. And you then have this zone here, which is interesting because we have an open at 1 1/4, the midpoint at 1 1/2, the VPOC at 62, and the TPOC at 1 3/4. Also coincides with the previous day late low volume node, which was formed on this late breakout. So I would certainly recommend a long. There should be some sort of reaction here between 61 and 62. I'll be very surprised if we don't get some sort of bounce off those areas. If we want to look a little bit lower down, you've got the bottom of value here down at 58, and then you've got this late basically a spike lower and a retracement down to the previous midpoint down here at 54 3/4. The upside is a bit more interesting. So we are, if I just remind you on the daily chart, we're close to breaking out of this recent range. We're above, or we're actually at the high here on this shoulder here, 72s. Okay, so we're just about to go through there. So apologies for the flicking. I know it's not very helpful for you guys. If we just look back at when we were last here, 69 3/4. So we have to go back all the way to actually New Year's Eve. And the problem with all of this data here is it's all done on incredibly low volume. So how reliable are the levels? I'm not sure. But if we were just to assume they were normal days, then you have the obvious reference point of the 75s being the single prints. You have the high of the day at 79 3/4 and another high of the day at 81 3/4. This is what's interesting, and this is what Dan and I were discussing yesterday about how it makes sense for the market to go and take out this high here. This is obviously an appalling high, made on the 29th of December on next to no volume. It's an obvious target, 8 3/4. It's the high as well, the high, the contract high. So it's difficult. Yes, there are levels above 72, but how valid they are, I'm not sure. The volumes were extremely low, so be cautious. Don't just assume that they're going to hold and be super strong. Perhaps there's a bit more credence over here. If you look at the high, this was OPEX day, 19th of December, we had a high at 76 1/4. The following Monday, a high at 76. That was probably done on more volume, although even then I remember volumes were extremely thin. The market had very much thinned out. But certainly from the 23rd of December right the way through to the 31st of December, yes, the levels show up very nicely on a chart, but remember they were done on very little volume. So be a little cautious of that. I can see that the S&P is holding around the 72 area. I can also see that the stoxx is holding around 25. Just finally, to make a point, when I walked in here, the dollar was getting hit across the board pretty much, but particularly in cable and the Euro FX. Currencies do seem to be driving things a lot. Keep a really good eye on the currencies, okay? Have a couple of ladders up. See if there's a correlation, see if the market's moving off those, and then you can use those to your advantage to take advantage in your main market. Brannigan did a very good debrief yesterday mentioning this very point to do with correlated markets and how you can take advantage. Okay, that's all from me, guys. I hope the trading this afternoon is as good as it has been this morning. Some of you guys done extremely well. Well done. Those of you who haven't, it looks like there's going to be plenty of opportunity. Keep your eye open for a gap and go. Doesn't mean I'm guaranteeing it's going to happen. I just think that the market is set up from a technical viewpoint, although the fundamentals don't actually favour that given what the retail sales was. So good luck, good trading this afternoon. Dan will be back tomorrow morning and I will be no doubt standing in again sometime next week. Cheers, guys.